Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for July 10, 2020. Today we're taking a look at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. I purposely today have the Australian dollar on the left-hand side and the US dollar index on the right-hand side, so you can see how similar they are, yet opposite. If the US dollar is going down, then we typically see the Australian dollar going up, and vice versa. If the US dollar goes up, we typically see the Australian dollar go down. And you can see that pretty clearly in this vantage point. Blue trend line on the left, red trend line on the right. You see the significant trend coming in from the left hand side of the Australian dollar chart, the rising move, and then the falling move on the US dollar. And over the past couple of weeks, this area here where the market has been just in congestion, bouncing around before the little blue trend line, bouncing around, same thing on the US dollar, bouncing around before the red trend line. So some similarities yet opposite for the Australian dollar left and the US dollar index on the right. I've also put these black circles there to show this area of what was and has been resistance for the Australian dollar around this yellow zone. That's 0.966555. You can see some resistance on the far left, the middle two circles, the current area of congestion and resistance around that yellow shaded area. Below it, we have this anticipation, this expectation that the market could go down, and above it we have this expectation that the market could go up. So that's an interesting way to look at it, especially in this, and I'll make this circle bigger, this area right here where this bigger circle is, and you can see it bouncing around in there. Currently the price is just underneath that yellow shaded area. Then if we go over here to the right hand side, there's that same area, and let's just zoom this circle out. So the big circle here, and we can see that yellow zone happens to be yellow. It's just coincidental that it's yellow. 96.60, 96.50. Again, the three previous black circles show support around there. We're in an area of support. On top of it, we could go back up. Below it, we would go back down towards the orange shaded area at the very bottom. So you can see the similarities and the area that we're at right now, that yellow shaded area on both of them. Currently, US dollar sitting on top of 96.60 and the Australian dollar sitting underneath 69.55. Let's take them both down to the 4-hour time frame. And as we do that, we can see that in a little bit of a different light, can't we? We can see that currently here is the Australian dollar just underneath that yellow shaded area, and of course if it breaks above, we would look for it to go lower. And then on the USD, look at that little area of support. It got above it, now sitting on top of it as support, and of course we know that if it gets underneath it, it'll go lower. Remember, what we're looking for is not a guaranteed trade, but with lower risk and higher reward. So what's the risk at this point? If you were to take a short on the Australian dollar, which is looking for the US dollar to bounce off and go long, if you were to take a short on the Australian dollar, your risk is pretty simple. You just don't want it to get above. Your stop loss would be above the yellow shaded area. So that's pretty easy to see. If you're looking to trade this, you probably don't want to buy under that yellow zone. You more likely are looking to go short underneath that yellow zone. And then you're looking at the US dollar. You don't want to sell it right now on top of the yellow zone. You more likely would look for it to bounce off and go back up for the US dollar from the yellow zone. So that's a couple of different factors there. I'm going to throw in one more thing to look at here for the Australian dollar. Let's bring it over here to the volume indicator, the Hawkeye volume. Take a look. It's come up here. It was green, 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 green. And then it's hit this yellow zone and waffled over to white. That's kind of a neutral color, the dots, trend dots being white. But it is interesting to me that we're seeing this area down here, the heat map indicator down here, is turning red. So that could be our first clue that there is some bearish volume coming in. Not only there, you can see a little bit lower down here, down at the bottom, where the market is turning red at the very bottom. And all we need now is the trend dots up here at the top to roll over to red, and that may give us a clue that the market's turning back lower from the volume is turning back lower from the yellow shaded area. If you don't have the volume indicator from the yellow zone, you're looking at tools like stochastic, MACD, that could be rolling over from the top of the oscillator. I don't know. I haven't looked at them, but they may be rolling over from the top of the oscillator, curling to go down, crossing to go down. That would be another clue. You could be using some group of short-term moving averages on a smaller time frame like the 5 minute. Let's say you're using a 5 and a 20 period moving average, and if the 5 crosses below the 20, that could be your clue that the momentum is shifting to go back down from the yellow shaded area. So a couple of things: the Australian dollar is into resistance, the US dollar is into support, and the volume indicators at resistance, potentially rolling over to bearish for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.